Good morning, traders. Richard here doing a quick Ichimoku cloud chart market review of the NASDAQ 100 index. We'll kick off with the weekly Ichimoku cloud. In the last update, we were about here, very close to this 15217 resistance zone. And the market was fighting that resistance zone. Let me just move that line there. You can see there. It was fighting that resistance zone there. Then consolidated a little bit, managed to find support at the 14,872 and then made another strong rally attempt only to run into trouble at this 15,857, this old resistance zone, the top end of the cloud here, as well as this range here between 15,571 and 15,875. So these old lows here were resistance, and the top end of the cloud here, 15,857, also another resistance zone. It met that resistance zone, hit that target there, and then consolidated back in August. A couple of down weeks in August, only to rebound very closely from this 14,485 major support zone for the NASDAQ, and it matches this front end level of the cloud, which is also now a major support zone. So watch out for this level for support in September and October. We're going into a seasonal week period, so we can see the market pulling back, retest this 14,872, and then in a very weak market 14,485, and then make another attempt at a year-end rally to take out this 15,857 resistance zone. So that's the situation on the weekly Ichimoku. On the daily, I can see how it ran into trouble here at 15,857, pulled back, then fought for support here within these cloud chart levels here. If we put a line up there, you can see the cloud chart, front end cloud chart support zone there, as well as the bottom end of the cloud here, and the other bottom end of the cloud level there. These are key support zones, and this support zone matches this low here that we had in June. So the market then found support there, then made another rally attempt only to run into trouble at this front end cloud chart resistance zone. So we back down this top end of this level. So there's still downside risk to the standard line and the turning line here, as well as the front end of the cloud, that 15,167 is a support zone. So these are the downside risk targets. So far the rally is okay in the daily because price action is above this bottom end cloud chart level. But ideally we'd like to see it to clear the top end of the cloud here and then be in a very strong rally on the daily. But there's downside risk on the daily to these key support levels. Watch out for the standard line and the turning line there, as well as this front end cloud chart support zone and the bottom end of the cloud there. And if the market dips below these levels, then it'll activate these two downside targets as well. Then it'll enter bearish territory because price action below the cloud is ultimately bearish. So that's the story on the daily. So we are consolidating, running into resistance, and there's downside risk to these cloud chart support levels. If we look at the 4-hour Ichimoku cloud, you can see how the top end of the cloud here, the resistance came into play. We're now back down testing the front end support levels. Watch out for a potential rebound from this top end cloud chart support levels. If the support is really weak, we could see it bottoming out at 15,000 and even just below 15,000, 14,919, the bottom end of the cloud here. So these are the downside risk targets on the 4-hour Ichimoku cloud. Turning to the hourly one, you can see they're digging into the cloud, fighting for resistance of the support of the top end of the cloud. There's downside risk to this bottom end cloud chart level here at 15,167, so keep an eye on that one. Upside resistance is the top end of the cloud, so that's kind of the range we're looking at on the hourly Ichimoku cloud. But from a big picture perspective, we are pulling back after hitting resistance to the top end of the cloud. There's downside risk targets to the front end cloud chart support levels on the daily, and keep an eye on that. As long as we stay above this bottom end cloud chart, the rally into the year should be okay. Now, if we just stand back a little bit and look from a big picture perspective, just looking at the NASDAQ equal weighted, NASDAQ 100 equal weighted, and the NASDAQ 100 index, we can see that there's quite a disparity in performance. The NASDAQ equal weighted index only up 22% so far this year, whereas the NASDAQ 100 is up 40%. So that tells us that there's a lot of the performance of the last couple of months is concentrated in a few large cap stocks. In fact, the top 5 stocks with the largest market cap make up 61% of the NASDAQ 100 index, and the top 10 stocks make up 74%. So you can see there's a very the rally so far very narrow in range, and it's really concentrated in the top 74% in terms of market cap stocks. It's concentrated in the top 10, which make up 74% of the market cap of the NASDAQ. So bear that in mind, that the market is a little bit frothy up here, since it's not a very broad rally. It's a very narrow, concentrated rally in the top NASDAQ market cap stocks. So in a nutshell, after such a strong first half of the year-to-date performance, do expect some form of a weak seasonal period in September. Possible downside risk to the standard line and the turning line of support, as well as these two front cloud chart support levels. So watch out for these two levels here, and the standard line and the turning line to come in as support levels in September. Until next time, happy cloud chart trading. Bye for now.